Right, tonight we are going to go through a few common errors that less experienced and sometimes experienced traders take. And most, if not all, are mistakes that I've committed myself. Yeah, and any experienced trader who doesn't admit to making mistakes and having losing trades, etc., is 99.99% probably lying. That's why a lot of us have got here, because we've made mistakes, learnt from them, and built on that and moved on forward. Common mistakes are getting distracted from good daily charts, because these charts have a habit of moving around in such a way that they can sometimes sort of put you off and distract you when the underlying move is building and in the process, but you don't sometimes see it clear enough until after the event. So if you want to have the power to predict, then you need the right tools and the right trade plan to go into the market with, to make sure that you can find these setups. And that's why building a trade plan is absolutely critical, and I'll cover that on another day in more detail. Put up the slides that I normally use on that one. But one example of that for me today, I made a mistake today, which I will put my hands up to, and that is not engaging this market here. I think this is potentially going to blast up, and I missed. This has moved 100 points off the lows today. This is the pound Aussie dollar. This is the 3-hour chart. I like the 3-hour chart because it's a fib number, and if you fib a 3-hour chart and look at the monthly pivots, as I've got here, you'll see just how well. I'll give you some more examples later on, but you'll see just how well this works. And today this did a nice little drop into the Dow Open, and I wasn't at my screen, wasn't focused, wasn't ready for it, and I missed it. And it looked a bit choppy afterwards, and then it has just slowly built up and up and given a very nice 100 points. But hopefully we will get an opportunity to get in it tomorrow, because on the data front we're quite light on the data front tomorrow. We've just got European inflation at 10 o'clock, building permits at an hour before the Dow opens, 12:30 UK time, 1:30 Central European time, but overnight, of course, we've got Bank of Japan. So we'll have a look at the potential impact of Bank of Japan, and we will also look at what the impact of UK jobs and UK budget and rate decisions or rate minutes will be on Wednesday, followed by Fed minutes as well, and a press conference with Yellen. So the next couple of days are quite critical to this market, and so interesting that we've got a bullish start to the week, assuming the market doesn't roll over between now and the close. So we've got a close in, or actually the Dow only closes in 57 minutes, but hopefully we'll get an opportunity to look at this one. Okay, let's look at why it was buyable down there and why I should have traded it. First off, it's a monthly S1. We've had a big push to the upside. By all means, ask any questions on the way if you have any. We have a lovely big push here, which had 1, 2, 3 waves, and then this is pretty much A, B, C wave correction. This could potentially be the start of the D wave, potentially. These waves are really hard to count, and I'm going to be updating my research on Elliott waves in this week. But This is certainly a nice bottoming pattern off an S1 pivot. At the moment we're holding 61.8 fibs on this move from that low to that high, and so I'm looking forward to seeing if we can pick up a pull, or certainly I can pick up a pullback on that one. Other factors, let's obviously go into bigger time frames. So that's the 4 hour. Let's look at the daily. There's the 3 waves on the daily chart and the fibs on the daily chart. So you can see how big move, spent a lot of time going sideways. I think the time, this would have been about the 3rd week in October, and this was about the 1st or 2nd week in November. So quite a long time for this one to ease back. And note how this box here gives you, it's no coincidence that this box was the same depth as this box. That's box 1, this is box 2. And we are potentially getting, well, we had box 3. There are actually very clearly defined steps up here. It's just a question of, this was resistance here, and it became support here, and at the moment this is, we've come in back to the low of the box, and we look as if we're just forming a nice little W pattern down here. Now, I mean, these waves, we came down here, popped up, and then came back down again for a W pattern here. We did a similar thing here, came to a lower low, that's fine, before moving up. So I still think, I'm not too perturbed, because I still think we've got time to get in this one, and we've got a lot of UK data to get out of the way on Wednesday anyway. So I'll certainly be looking at the Data 15 setup we talked about and looking at that in detail. But I think this one, this pound Aussie dollar, is a good one to watch, and any further dips, certainly any dips into this area here, which it must be, I think maybe we'll even get that, because I think there must be a lot of orders down there, and I think the market makers might just want to come down and find those orders. At least I really hope they do, because you can see the support. This was previous resistance. We used that level before in February, so it'd be very nice to see if we can come down and test that again. Of course, if we can't hold that, then we're going to 190 and possibly even lower. But other things to note, here we had divergence in the stochastic momentum index, which I like, and the RSI. So nice, in this area here, we had nice divergence in, let me see, so far we've actually got the same divergence here. We've made a new low down there at the same time that no, I take that back, we haven't got divergence, sorry, I take that back. This stochastic is just narrowly lower than that. We'll wait and see anyway. But that's certainly, this area here was good for that divergence. What else have we got? Let's look at the weekly. Let's look at the bigger time frames. So what, we'll go look at the monthly. We're halfway through this month now. Let's pull up a monthly. And you can see the fibs I got on the monthly was sitting on the bottom of the fib range here, having had a nice push. Look at those, all those blue, there's only one red bar there out of the last 1, 2, 3, 4, 5, 6 months. That's very, very bullish chart. So we're picking up a fib level and a support level from that high there, and so this, I'll be very happy for this to see quite a nice sharp dip in any one of the data aspects that we get coming up here very soon. Weekly. Weekly, you can see let's look at chart patterns as well in this. Extended on the stochastic, coming off on this sort of three little waves we've had here, and 2 weeks of selling. So we just need to hope that this 19, we need to not hope, we need to see if this 194. Hi Graham, good to see you. Thanks for joining us. Be good to see if that can drag this down anymore. It's had a terrific run. RSI just bouncing off the 70 level. So as we get into data, I think tonight will be important. The Bank of Japan, obviously, Australia is neighbours to Japan, so what happens in that hemisphere could have an influence on what happens here as well. At some stage, Japan are going to stop easing like everybody else. So let's just see. They have had a pickup in inflation, so that's why I'm not getting too heavily engaged in the yen pairs at this stage. Right. So that's the reason why I like. Let's go back to the daily. That's the reason why I like this one so much, and I think this could give a good move if we can just get positioned. So right, we're just testing the 55-day moving average. That's the 55 there. And like I said, we do have a tendency to get at least a couple of waves, if not more, if we are going to move. So I'm not too perturbed about missing that low today. At least I hope I'm not. I hope it doesn't come back to. Hope it doesn't carry on moving and run away from me. That's what I meant to say. Right, and one of the best charts today was the DAX. The thing with this DAX is it's a double whammy. We've got any well-organized industrial nation that is lucky enough to have a heavily devalued currency as well as a good industrial base always stands a chance of ripping off like this. And this an amazing chart, and I guess you could say I have benefited from this. Well, I have definitely benefited from this from the point of view that I have shorted the euro yen and got money out of the euro yen on the back of this. So if you concentrate on forex or indices rather than both, you will be better off, and that's what I've done. I've stuck to the euro yen and benefited from this sort of action in just another level, hence the reason why you don't have to trade oil. You could just trade the CAD. So we've got monthly S3 up monthly, not S3, monthly R3 up there at the big 12.5. We've got triple witching on Friday, so at this rate there's a decent probability that could get to 12,500. It's just a question of where you get in. They're getting in on a market that's that extended is tough. I tell you what, European inflation could dent this tomorrow. If there is any increase in European inflation, that will suggest that the easing may be shorter lived than perhaps some people have thought. At least that might be the initial impression the market will get. That could give us an opportunity to get long at a lower level. I mean, at this rate, even 12,100 could be a gift. That's so strong, because if you look at the previous big bar here, we just dipped back a little bit into that bar and then ran again. So if you want to get in on this, you are going to have to buy high and risk consequences and take the consequences of buying high, but there's other ways of doing it. Right, moving on. Before I leave this, I mean, where would have been the best chart? Where would have been the best opportunity to get in on a chart like that? Well, if you're a day trader, you obviously drill down to smaller time frames. If you're a swing trader, you've just got to look out for areas like this on a major pivot in early March, and buy that level, which was already quite high. That's assuming you hadn't got in at one of these earlier stages, and then sat in it. Of course, you know, we've all got hindsight now, so we can see how this little move worked well. There's the three waves I talked about. Did a short video on three waves last week. There's your wave 1, 2, and 3. Breaks out, dips back in, the dips got bought, and then every little dip thereafter gets bought. Look, if you're a day trader, then this is what the 3 hour looked like. I've marked some points. Again, this stochastic chart, stochastic index, we had a low there on the Feb 9th, and we actually broke up on the 10th. You had a low there on the 17th. We just trade stochastic. That would have gone well. See, this is such a good market. Even a dip under the red line there was pretty good. Right, so some great charts. I said I would talk to you about divergences I saw in oil. This is my 3 hour oil. So you can see the waves we've had and channels to the downside. There's a major support level on Jan 29th. That would have been towards the end of a contract as well. Let me think. No, the contract end would have been back here. Contract changeover would have been round about here. So the new contract did a W pattern and shot up. Anyway, to cut long story short, if we had a new low and a higher low in the RSI, we had divergence here, new low, higher low in the stochastic here as well on the 3 hour. Would I trade this in a 3 hour chart? Yeah, why not? Nice stopping bar here. Very nice pullback into just inside of that stopping bar, which is where I called it. And in the smaller time frames, we have hit resistance. So if you're a day trader and you just looking for smaller targets, they were there. Well, this is the box that's marked off the Sunday open. I'll go through that in a minute. So you can see all the obvious intraday resistance up there. There's the 3 wave, 1, 2, 3, and it breaks into the pit close up to resistance, up to the 44. This is the Sunday. The Sunday open was there. This was the Sunday low. So we dropped out of the Sunday low into the open, pushed up, and then did a wave pattern into 44 on a 5-minute chart. Look at that on a 15-minute chart. And if you fibs on a 15-minute chart taken from the breakdown, let me think, what have I taken that from? Sunday Open. I've taken that from the high of the Sunday Open to the low of the session, and we got a 50% fib move into the 15-minute 50 MA. So if you know your technicals, if you know the levels these markets like to trade to, there's your intraday sell-off in the just our post-Euro session that attempted to go up to the, actually the Sunday Open was 44.83, so we actually failed at 44.80, dropped down to that level, and then there's the pushback into the pit close. Okay, let's keep this short and sweet. So let's just look at a couple other key charts. So I'm going to look for, because that pound Aussie dollar is still going. I'm going to try and look for pullbacks to the sort of 340, 350 level on that one. Let's look at Euro Yen. Obviously spent a lot of time talking about Euro Yen last week. Let's just update on some of the time frames and what the Euro Yen's doing now. So there's the waves in the Euro Yen. Let's push this up. So we had 1, 2, 3, and we have 1, 2, 3. We just couldn't hold it. So this is the main trend line here. Dropped it, pushed it back to kiss, to retest the trend line, retest the fibs. That was 50% fibs up there, and then they just wind it down. But these are the three. So that was the one main wave, 2, 3. Shorted up here on Friday. So A, B, C wave. I'm looking for the start of the D around about the 129, 129.50 to see if that can drop out. In the meantime, we are S3, monthly S3 is very extended. It's very, very extended. Other thing, notice the stochastics. You look at all the high points in the 3-hour stochastics, and it picks up on the failure zones. Coincides with RSI, obviously it's better. So if you coincide one of the most powerful signals out there is combining Elliott wave, combining the waves, momentum waves with fibs. So if you look back at the chart, how I put the fibs on this chart here. So I've got this from the Jan 8 breakdown, the resistance area, Jan 8. All this congestion here was just over the 50%. It's common to see overshoots because the market liked to fake it. Two overshoots there. There's the neckline. So the secret is, if you've got something that's moving down like that, just pick the highs. Just sit there, do nothing, and just try and pick out the highs. You can refine it in a smaller time frame, but the trick is not to spend too long looking at the smaller time frame. Only use the smaller time frames to pick your spots to help refine your entries. So I watched, occasionally I watch a couple of videos from competitors to see what other people are suggesting, other people are doing. I watched a couple of videos last week, and on Friday, for some reason, a couple of videos I watched were people buying the euro. So while this was pushing up here, I saw people in their videos, just do it out of interest, just to, yeah, as far as I'm concerned, it's a continual learning curve. I'm interested in what other people are doing, what other people are talking about, and anyway, so I looked at these couple of videos, and these traders were buying the euro, and I couldn't fathom out why. Anyway, I made money and they didn't. Maybe they were. Actually, to be honest, the time frames they were showing in their videos were, some of the time frames were very small, and some of the emphasis was on small time frame. Right, time's getting on. Other charts I'm really interested in is let's look at some stocks in there as well, because we're coming into the half an hour. I don't want to go too far over the half an hour. So here's the daily on this one. You can see, actually, we've got, look at the divergence on this one at the moment. In January 15, January 23, we had these waves to the downside, and then we created, the charts created these divergences. So we spent quite a while just creeping up, and then we ended up with this nice smooth but very slow distribution pattern with the market selling at the highs, and then we started to see some more aggressive moves to the downside. So like I said, one of the ways you can do this is just to simply just keep, if you've got something that's trending low like this, just pick these highs. I actually just keep shorting the highs. Most of them, if it is a good trend, will work. And you can see that 136.70, 137 was a good area to get short, and there's the pattern, the wedge breakdown basically. Got caught up in this apex. When the consolidation pattern was over, we started making lower closes, and then they just dropped it, and they just collapsed it. Any questions? So we need to get European inflation out of the way, and then see if that can retrace to at least the 130 would be nice. Now I've talked about 139, 139.50, but at some stage we're going to go and test that 55-day moving average. So it'd be nice to see if that can do that sooner rather than later. Other common, let's talk very quickly about other common mistakes. Overtrading is one, and overtrading can be a result of looking at smaller time frames. Let's look at oil on a small time frame, since we talked about oil today. I think the key to this was timing. Oil often has got lower volume between the open and the pick close, so it's not a lot of point trying to engage this market in this sort of period. If you're going to trade it, then stick to the trend, and the open saw a really nice trend move on a breakdown of this area here. This is counter trend, so I just went in on a small position and just saw that push into, really it did a snapback. It snapped back to the area it came from, ended up with a nice triangle. I think there's still potential, and absolutely nothing wrong if you're in that. There's nothing wrong with taking profits at that 44. A lot of indications that there was resistance up there. If you're swing trading it, then yeah, just you can move the stop to break even, because if you did buy those lows, you've got a bit of a buffer there. Hi Nigel, good to see you. So over trading using smaller time frames, missing really nice pullbacks on a very good trending daily chart like I did today on the pound Aussie dollar. Picking a bottom. Now this oil, the market makers know what we look for. They know that if they hesitate around a support area, it's going to drag a lot of people in. But the RSI was still midway here. Stochastics was midway. Only hindsight can, if a couple of days later, shows you that stochastics has crossed. But in a consolidation pattern, you'll see that in all time frames it works really well. But anyway, a full-blown reversal will often be at least a two-wave or potentially three-wave pattern. And this is three. If you include these two areas here, that is effectively a three-wave. There you get the divergence, and all we do is push back into resistance. We push back into the 55-day. This is a 21 EMA, by the way. Push back into 55. Then got squeezed between 55 and the 21. Consolidation is over with a hangman and a lower close here. But there's not that much in it. Risk reward ratio is not great because you've now got support under here. So stay on the right side of it, and you can make money. So just keep shorting it. Okay. Yeah, those ETFs are a good way of much less volatile. Yeah, so I hope that pans out for you. It sounds as if you've definitely got that under control. So let's see if that can work for you. Like I said, we're coming to the end of a contract on this with triple witching on Friday. So we could see that at least run into. It does look as if it's trying to find a foot now with that close today. So it's a doji-like bar that could start to see us pick up into those resistance areas at least. Of course, if it's just a hesitation bar on rotation, then we could easily see that S3 at 38.40. Let's find any other questions. What else are we going to talk about? I think the classic mistake that a lot of less experienced traders make is simply not going in with a plan, or you've got a plan. Perhaps your plan is too complicated. That's another. Let's look at overcomplicating charts. If you've got too many indicators, too many moving averages, and you haven't back tested these setups, and you don't understand, or you're not familiar with the way in which the markets wave, then that's a cocktail for problems. I was going to say disaster. It's certainly a cocktail for problems. So understanding how these markets work, understanding what a reversal looks like, and what a trend trade looks like, is going to be key to that. And this is actually a very slow grind. This is quite often, when you get small bars like that, it's quite often a sign that it is a good solid trend. And then you get a capitulation here in November. So rather than a big rush to the downside, small moves like that is often a sign that the big institutions are just chipping away and selling part of their position, or even shorting just in these little moves to the upside. And also, one other thing to say is when you get a big push to the downside and you get big bars, you quite often get some sort of snapback. Sometimes it can completely retrace. Here, let me just enlarge this a bit. I want to finish up quite soon because I don't want to drag this on, and also I'm hungry. A fairly aggressive move to the downside, but you get a lot of short covering. I wonder if that's in a weekend. It could have been into a weekend. At some stage you're going to get profit taking and short coverings. That gives you the wave to the upside. And then of course all we do is, it's not a reversal. Actually, you could classify that as reversal, and new low, close above next day, extreme RSI. You could sample that, but in this case we just rotated back to the trend. Just reading your question, hang on a second. Yeah, they do take some getting used to. The other thing I was going to, let's just talk about how the smaller time frames worked on the Euro Yen last week, because they took a while. Some of the Euro sessions were a bit ropey in the post-European sessions, or certain other phases in the US sessions worked well. Let's look at how these fib levels worked. Let's put my fibs back to what they would have been last week. At one stage I would have had my fibs there. Obviously you got, this is in the Asian session. If something moves in the Asian session, you just got to try and just do your best to get it as high as you can if it looks as if the target is going to be that much lower. Let me think. This was, so we dropped overnight, then we came into Central European period. This bar here, yeah, okay, so that was difficult to trade. There was a nice move on that one. So we pushed up into resistance on this day. We looked bullish. We looked as if this 923 was going to hold. A couple of nice 15-minute closes, and then I bet that was data. That was probably data. The data 15 setup says if it trade it in the direction it came from, or in that case that doesn't return to where it came from, that just continues the drop. Okay, so I mean 15 minutes after the data 15 setup is cancelled, you get a sell signal, so, and a continuation at 10 o'clock anyway. The reason why I was getting you to look at this chart is because of here. This area here. Notice how, the reason why I was getting you to look at this is because, again, this can happen in all time frames. But what we've got here is a series of bars in a relatively tight range where all the highs are getting sold into, stochastics are high. So I like, in a downtrending market, high 15 minutes stochastics are fine for me. I'll take those any day of the week. But you can see how later in the session we're getting some closes. We're getting a push up, then a close down, a push up, a close down, and then finally when it's over, I'll take all this mess off. Finally when it's over, you get a hangman and then a close underneath all the moving averages. I know you get that earlier on, but if you was still hanging in there. Maybe you got short up here. Nothing. You know, we're talking about anticipating the market. So there's a resistance level 129. Key round number. Previous sell zone, sell level. Yeah, a good trade is to actually just short these highs up here at 129, and then tuck your stop away above the 129.10. We'll do more of this in the room. And if you're still hanging in there, or just keep your stop up there out of trouble and leave it. If you're looking to get into the trade because you're still flat, then you do get these as you get out of the Euro session. I bet this was I think this was some UK data that happened here as well. That's very similar to the other day. The data's out of the way. We get a sell signal, then we get confirmation at 10 o'clock, and then we spend the rest of the time just following through. But anyway, the main reason for showing you that was just for you to get used to seeing these kinds of waves and these patterns and these breakdown areas, because there's two things going on here. You've got fib levels and you've got patterns and you've got Elliott wave. So combine that and you've got a much clearer idea about where that's likely to go. To me, the chances of that going higher are extremely slim, and the trend is down, so just keep shorting the highs. That's all I did last week on this. I got that move, I got that move, and I got most of that move. Whereas some people might have been buying here, looking for this to sort of close up, expecting it to close above 129 and expecting it to retrace maybe. Right. I've been talking for 40 minutes, so I don't want to go on too much. Any questions? Any charts anybody's interested in looking at? We haven't looked at the indices for a bit, so let's just have a quick look at where the indices are. That's bullish. That's a nice move. It was difficult to call on Friday over the weekend. So we've got wave 1, 2, 3. So at the moment that's an A wave correction. This is looking like a B wave correction. If we can hold, we need to close at least above that 21. Charts that fail at 21 are at the very least suspicious to me, and could see that rolling over. So if we can hold above that 21, and we stand a chance of waving up and then seeing a D wave pushing into these levels here. But any failure, a poor close, and certainly a close under this monthly pivot, I will get bearish. In the meantime, the bulls are doing all they can to defend those lows and looking as if that could push up. But like I said, that was a difficult call at the weekend. What I hope doesn't happen is last week we had a pound yen trade like this, had some selling, nice bullish close on Monday, and then it just rolled over. So yeah, FOMC exactly. So we could end up with, this is a nice box. So you're right. We could just end up flapping around this box, and then whichever way we come out of FOMC, which is the perfect time to be looking at a Data 15 trade. Some of my best trades have been Fed Day Data 15 trades. On Wednesday, because particularly in this trade, I wouldn't touch this unless this gets really bullish into tomorrow. I wouldn't. You could day trade this. Plenty of opportunities to day trade this, but I'd be very careful about Wednesday, because Fed days tend to be very messy, particularly the indices. It's better just to not touch the indices at all on a Fed day. Also be very careful on the other instruments as well. quite often on a day like that, it's better just to stay right out of the market and even just wait and see what they do with the markets on that day. And then obviously we're doing thorough videos that day, and then we'll see what might come out of it. But FOMC days like Wednesday can give really great post-event moves rather than certainly moves on the run-up to that on the day can be really choppy. So be careful. Right, my throat's getting a bit dry anyway. Any final questions before we close up? So look at a couple of stocks. Let me get my stocks up. Baidu. I talked about Baidu a while ago, a few days ago. Let's see what Baidu's doing. I think Baidu's setting up for a big move. That's a nice box play on Baidu. If any of you are not trading stocks, then you need to seriously consider it, because longer term, this is where the wealth is. This is where the wealth building is. It's gotten very messy. Well, it does have a habit. This one does have a habit of getting a bit messy. I think this is a bit of this used to be day trades used to be all over this. I think there's less volume in this, judging by these charts. But keep an eye out for this one, because I think if we start to close above 210, I think that could pop. What do you guys see in that one? We have been trapped between the 50 and the 200 when we sold off at 215. But I think that's got potential. I like the way that we are holding this level, and if we can close above here, I think that could burst. Another one. Let's have a look. Good old Goldman's, and then we'll look at a couple other stocks, and then we'll finish up. So look how shoddy this looked here. But that dip, so we look shoddy at 193, dip to 183, put a stopping bar in, like 185, and here we are coming into 192, 195. So the waves are good. Let's count the waves on this one. We've had 1, 2, 3, A, B, really that's C, a narrow wave, D wave, double top, M pattern at the top, so they drag it all the way down to this level here, major support, and then we start again, wave 1, so we're in wave 2 here. So if things go well, and I think this is a good environment for the likes of Goldman Sachs, I think we could, particularly if we break up, close above 200, I think we could really get somewhere on that. So if you're interested, I would look for any pullbacks to 188, get FOMC out of the way, and see if you can get a dip back in that one. Bank of America. Okay, I'm just going to wind up now. America's not done much. Let's have a look at Apple, because that's had a massive impact on how the Dow's how the Nasdaq's behaved. Because it's the biggest company in the world. Yeah, so this pullback here so it has some nice waves. Excuse the sound effects. So here we've got 1, 2, potentially a wave 3 coming. Stochastics are turning nicely. Risk-all ratio is not great, but between the 50 and the 200, which I do not like here, but certainly, you know, buying dips in this. Again, let's just look at the stochastics. You know, these stochastic dips proved okay in this one, and stochastic highs have been reasonable exit signals. RSI's work better in. Oops. Okay. Right. So I've just run through a few things today, and hope you enjoyed that. So we covered a lot of ground. We talked about fibs and Elliott wave. We talked about how this momentum stochastics can be a good indicator. Talked about common mistakes that I've made. I've made them all. Let's be honest. I'm sure I've made them all. In fact, I'm quite confident I've made them all at some stage. But it's just a question of trade management, looking at the fibs in combination of the patterns, and picking a spot. And of course, we'll do that in the videos and the room. And let's see if we can squeeze a lot of points out this week. Right, I'm finishing up now. Final call for questions. Thanks for joining me. I'll stop the recording. If you want to come in the room and you haven't got the link, let me know. It's the same link as you come in here, guys. See you tomorrow at 8 o'clock for those of you joining me in the room. Thanks for joining me, and have a good evening.